Have you ever wondered how people get rich? I mean, really, really rich? It's almost if at a certain point their wealth just continues to create itself. Well, one of the most important and exciting concepts in wealth generation is what's called compounding interest and growth. We know, it sounds like a boring finance term, but I promise by the end of this video, you'll see that's actually the most fascinating shortcut you can take to real wealth. So stay tuned and watch until the end so you can understand it, learn how to earn it, and find the secret to watching your wealth quite literally create itself. Welcome back to Lifestyle Billionaire Club, where future millionaires and the new rich come for inspiration and education on how to reach their goals, build true wealth, and learn to keep it. This channel isn't for the lazy, so if you aren't here to get inspired, you may as well leave now. But if you're a connoisseur of the good life, welcome. You found your home. And before we get into today's video, if you're dedicated to hitting your next level, then hit the like button, subscribe to the channel, and turn on post notifications. And if you get value out of today's video, share it with friends because remember, getting rich is more fun together. So let's get into it, shall we? Number 1, what is compounding interest? Compounding interest and growth is one of the most important concepts for you to learn, understand, and earn if you're serious about building wealth. This is not a short-term get-rich-quick scheme. It requires long-term investment with an eye to the future. Are you ready? We're going to take you through it, and by the end of this video, you're going to be able to see how you can double your investments and how to become a millionaire by starting to invest early. To begin with, let's start by looking at exponential growth. The best way to illustrate this is to ask yourself, would you rather have $100,000 now, or would you prefer a penny that doubled every day for 31 days? $100,000 sounds nice, doesn't it? But let's take a look at that penny. Day 1, you have 1 penny. Day 2, you have 2 pennies. At day 7, you have just 64 cents. Day 10, you have $5.12. Day 20, you have $5,242.88. With just 11 days left, you might be starting to wish you had just taken that $100,000 up front. But by day 25, congratulations, you now have $167,772.16. By the time you reach day 31, you have over $10 million. And if you had initially picked that $100,000, you're now crying in a corner. This is the power of compounding or exponential growth. In the first few days, you don't see that much of a difference. It's in the late steps where the money starts to truly earn. Of course, in real life, you won't be looking at returns this fast or high, but the results are still impressive and the point stands. Number 2, the real world. So, what does compound interest look like in the real world? Think of it this way. Warren Buffett has amassed a fortune worth nearly $82 billion. He just celebrated his 90th birthday and began investing when he was just 11 years old. He has invested consistently throughout his entire life and manages an average return of 22% a year. However, about 94% of his wealth has been created after the age of 60, or in the last 30 years of his life alone. At 52 years old, he had a net worth of just $376 million. Today, this figure exceeds $80 billion. Again, this is due to the magic of compounding growth, which Albert Einstein dramatically called the 8th wonder of the world. Simple interest versus compound interest. Now let's take a look at the difference between simple interest and compound interest so that you can see why this tool is so powerful. Say you have an investment of $1,000 in the bank. The bank pays you an interest rate of 10% yearly, and each time you are paid, you pull out your earnings and set them aside, meaning they don't continue to grow and earn for you. With simple interest, paid out at 10% every year, your $1,000 investment will grow to $1,100 in the first year, but you will pull out the $100 interest payment. The second year, you receive another $100 interest payment. Your total has now grown to $1,200. In the 5th year, you reach $1,500, and by the time you reach the 15th year, you will have a sum of $2,500. With simple interest, the interest is calculated on the original $1,000 only. With compound interest, however, you leave your profits in the bank to earn additional interest. That same $1,000 will bring you $1,100 in the first year, $1,210 the second year, $1,611 in the fifth year, and $4,177 in the 15th year. This is because interest is being calculated on the original sum plus the interest gained each year. You're getting interest from your interest. It compounds. What's also exciting is that compound interest isn't always paid annually. It can be calculated biannually, quarterly, monthly, or even daily. So, the frequency of when compound interest is paid is going to have an impact on your investment too. But just how long does it take to double your money? For that, we take a look at number 3, the rule of 72. When it comes to investing your money, the question we all want to know is, how long will it take before seeing big numbers, the difference makers? To give you an idea, we're going to take you through the rule of 72. The rule will give you a rough idea of how long it will take for your investment to double. Simply put, if you divide 72 by the annual growth or interest rate on your investment, the result is the number of years it will take to double your money with compound interest. For example, on a 10% annual return, you can expect to double your investment in 7.2 years. It's 72 divided by 10. This is a rough calculation as it assumes that the 10% annual return is set. It doesn't take into account variable rates and growth if you're investing in individual stocks. Investing in stocks is one of the best ways to grow your wealth. In this case, you'll buy stocks in an ongoing company that's hopefully going to grow, and this can happen at a faster rate than 10% per year. So, you can double your investment in less than 7.2 years. On average, as a long-term investment, the stock market will consistently bring returns close to 10% yearly. Let's briefly talk about some of the fastest growing companies around you so you can really start to see how your money can work for you. Amazon has a 20-year growth rate at 31.39%. This means that a $10,000 investment would grow to a whopping $2,358,010 over 20 years. Nike, whose 20-year growth average rate at about 14.82 would mean that your $10,000 would have grown up to $158,858. Not too shabby. This is what is possible with compound interest on one investment of $10,000. You don't even have to be particularly wealthy to begin growing your wealth. Everyone has a starting point, and the beauty of compounding growth is you simply need to start. And this brings us to number 4, getting started. So let's talk about time. An important factor that does impact compound growth is the length of time you keep your money earning for. As we said previously, this kind of wealth building is done over longer periods of time. So, start early. If you begin to invest at 25, you're going to have more wealth built up for your retirement than if you started at 50 or even 35. Let me give you an example of what a difference even 10 years makes. If you started saving in your 20s and have $20,000 saved by the time you're 25, if you invested at a 7% annual rate of return, it would double every 10 years. So, your final sum would be $160,000 at the age of 65. However, if you started saving later and invested $20,000 at the age of 35, at that same rate of return, your final sum will only be $80,000 at the age of 65. This is because using the rule of 72, every 10 years your investment will double. If you begin investing earlier, then you have more doubling cycles available to you. It's the later doubling cycles that really start to bring in your wealth. If you wait until you're 50 to start investing, you'll be looking at a 15-year investment plans, and you won't have the same amount of time to return your investments and grow and have it work for you. I'll say it again. Start investing as early as possible so you can get a maximum return on your investment. But how do I use this to become a millionaire, you might ask? It's actually quite simple. And it brings us to number 5, millionaire status. To make this even sweeter for you, if you are aiming for millionaire status, it is more than possible through compound growth. $10,000 invested annually at a growth rate of 8% will bring you to $1.2 million in 30 years. Remember, True wealth is often earned from discipline, not some get-rich-quick scheme. Generational wealth takes endurance, discipline, and commitment. This is a longer-term wealth strategy that allows your money to work for you, and you don't need to be wealthy to begin. You just need to begin taking action. Is wealth generation beginning to look possible for you now? Curious about where specifically to invest? We'd love for you to share your thoughts in the comments and ask any questions you don't quite understand. Number 6, where to invest. Remember that banks are not the best place to keep your money if you want to grow your wealth. The 3 best ways of investing your money are in business, stocks and dividends, and real estate. Okay, we might throw crypto in there as well. An advantage of stocks is that they may also have dividend payments that you can either cash or reinvest. If you want to create more wealth faster, then always reinvest. This is obviously the foundation of compounding. If you're interested in finding out more, and why wouldn't you be? Play with an online portfolio growth calendar so that you can start to get a feel for how much your money can work for you through investing. Think about how much you can start investing and start looking forward to seeing your wealth grow. Once you start to understand the power in compounding interest and you know how to earn it, you'll be able to generate as much wealth as you want. And that's what you're here for, isn't it? We'll see you on the next one and keep helping you build on your path to wealth. Thanks for watching, and check out the next video. And always remember to subscribe and turn on post notifications.